My name's Elgin Perez, and I'm the branch manager for Bay Equity Home Loans. One of the things is you might have not heard of this company before, and we're aware of that, and that's because we don't go ahead and spend any of our money on advertising. We spend all our money on training people and educating our people, and more importantly, making sure our staff is going to be able to guide you all the way through the home buying process. So a little bit about how we're different. It's, as I tell clients, we're different because we're not your traditional bank or lender that when you apply, you're left in the dust because they just tell you, yes, you're approved, or no, you're not. Have you guys ever experienced that before with anything? Yeah, it's a little frustrating, right? Yeah, I see some of you guys nodding yes. So what happens there is you're not the professional, you don't do this for a living, and I find it, and I found it through growing up, very unfair. Why? Came from Costa Rica. My parents started working here. At one point, my parents had 3 jobs. And watching my parents grow up and go through their struggles and me experiencing those struggles, obviously, because of them, it's made me grow to find a way to help other people in my local community. And I found that I'm able to do that doing this. And so by that, we train our staff not to say no, but if for some reason we can't do it right now, let's figure out all the whys, educate you, and most importantly, show you how to become that homeowner. Whether that is today or whether that's 3 years down the road, 10 years down the road, the reality is we can all get there. Again, I remember, like I'll just say one last time, I remember getting here when I was 5 years old, and it was until I think I was 14 years old that my parents owned their first home. That's a long time. That's okay, they got there. Something tells me that if they had the right guidance and the right people that could have helped them get there sooner, they would have been homeowners 2 years, 3 years into that. And I know that firsthand because I've been able to help clients that have come from other countries or other situations, and within a year, 2 years, they're already homeowners and they had nothing. So that's our goal today, that's our job today, and I absolutely love it. With that being said, that's a little bit about who I am, who we are. Who we have here today is Ariel Vargas, okay? Back there we have Tony, okay? There are brokers from the Listing Realty. One of the things that we also like to do is support our local community and our local businesses. So they are one of the top premier listing realties in town, and it's funny because they're called the Listing Realty. And what they also strive for is they have the same vision that we do with clients, so that's why we partner up with them, okay? And their goal is once we pre-approve you, to make sure not only do they find you the right house, because they're not just caring about you buying the most expensive house, they're actually caring about, hey, no, can you afford this, can you stay in it, and are you going to be happy? But also finding you the best deal and being able to negotiate appropriately for you. And we'll go into details on what I mean by that as we get through that process and we go through this whole process. One of the things I tell you is I like to have interaction with everyone, so please feel free to interrupt me at any time, ask questions, because I assure you someone else is wondering the same thing. And all you're doing is helping each other. And back there, you have their staff, or well, not really, but all the agents that are here as well, supporting them. So they're all here. So we got, if you probably saw, we probably have over 20 people today on site, and they're all here specifically to work with you one-on-one if you choose to. Okay? Yeah, on that note, I'm gonna turn it over to Ariel.
Well, thank you. That was a great introduction. Well, we're gonna start off with something that most businesses are doing nowadays. So everyone pull up your cell phone. Pull up your cell phone, please. Don't be afraid. Pull up your cell phone. Go to the Listing Realty, and we're going to like the Listing Realty. So go ahead and put it up. Pull it up. Pull up your cell phones. Don't be afraid.
I think I already did mine, though.
Okay, good. Pull up your cell phone. All right. Let me know when you're there. And like the Listing Realty. Facebook, yeah. Pull up your cell phones. Pull up Facebook. And like the Listing Realty.
And actually, on that note, I don't want to forget, one of the things you guys notice, we might be mic'd up here.
Yes.
We are recording ourselves.
Yeah.
Everything is turned to your guys' back of your head. However, if you do feel uncomfortable, just see one of us at the end so we notate that. But we are filming this for training purposes, so we can only improve on what we're educating our clients. And we go back and watch it together and say, okay, we should have maybe included this, or we forgot this, because we're humans. So that's why we're doing that today, just so you're all aware, okay? Thank you.
Okay, everyone pulled up their cell phone, went to Facebook and liked the Listing Realty. Excellent, excellent, excellent. So this is what we're gonna do today. We're gonna go sort of a buyer's guide, a buyer's presentation, where we're going to explain the process of purchasing a home. And then I'm gonna pass it on to Elgin, because he's the mortgage expert. and he's going to talk to you a little bit more in depth as far as what the mortgage loan process looks like. On my end, it's going to be more of an overview of what to expect from our agents. And then Elgin's going to be covering questions and answers. First, he's going to do his presentation on the mortgage side, talk about all the programs out there, what would be something that benefits you, doesn't benefit you, and then we'll cover some questions and answers and meet one-on-one with you guys. So he will do that. So the Listing Realty, a little bit about us. Our mission is to serve others. That's who we are. When Tony and I put the company together, we wanted to make sure we created an environment that not only serve our realtors, but serve our clients. So we're very happy that you're here. Thank you for registering to our event. I'm sure there's going to be more people trickling down, so excuses for that. Sometimes people are late, and that's just normal. We do it as well. So just wanted to put that out there. A little bit of the expectations. One, we are people of integrity, and we make sure that we vet our agents when they come in. So you're not going to get anything but integrity from us. A lot of us are straight shooters, so we're honest, we're upfront about it. We're great communicators. I myself prefer text messages. Some people like to actually have the phone call, but we have all kinds of opportunities to communicate with us, including Facebook, which we're very big on. Confidentiality, whatever we discuss here or you guys discuss with the mortgage lenders, is going to stay there. That's one of our most important traits. And then obviously the expertise we bring to the table. We have about 35 agents at the office. In the last 2 years, we've done over $100 million in sales, about 350 transactions. So you guys are going to have somebody that really knows what they're doing. So we are not going to be unhappy, let's put it that way. We'll write a contract that protects you whenever we put an offer between a buyer and a seller, a contract that will have plenty of contingencies that will protect your interests. So we'll do that as well. And we'll have a customized MLS search, which I'll cover a little bit more in depth. Obviously, we're going to be assisting the lender through the process. We are the type of agents that if we have to go to your employer and get something from there, we will. We go the extra mile every time. We just don't show you houses. So you're gonna love the customer service at our office. That reminds me, make sure you put your phone on mute or vibrate. That will be really helpful. And I was supposed to say that right after the Facebook like, but that was a good enough reminder right there. Also, we'll be there guiding you through the turbulence. Buying a home can be very stressful. We're sort of the pilot, right? Driving through the turbulence. Just let us do that for you. Take that stress away. That is what we're there for. So it's you let us take over. We'll guide you through the turbulence. We know the steps to take. There's a lot of people involved in a transaction. There's about 25 people involved. You have your lenders, your loan processor, title processor, seller, buyer, both agents on each side, surveyors, appraisers. There's so many people involved. Our job is to alleviate a lot of that. So don't worry, we will orchestrate the transaction for you. And one thing I do want to cover up front, because there's a lot of myths out there, in Florida, the seller pays the commission. So the seller hires an agent, and that agent is out there promoting the property. You have a buyer's agent on the other side bringing in that buyer. You don't have to worry about whether I need to pay my realtor or anything like that. When you are a buyer, you do not pay the commission. The seller does. So rest assured, that's not the case here. Remember, I talked about the MLS. One of the things I want to cover, once you get pre-approved, and that will be obviously the job of Elgin's team, we're going to customize a search for you based on your criteria. Okay? You're going to get a portal. It's going to have a list of the homes available, and you're also going to be able to search in that portal. Okay? Our agents also have a website, top-notch website, state-of-the-art website, where you're able to search. I always recommend that you do not use public websites. Public websites, Zillow, Trillo, Realtor.com, they feed off of the MLS. So the information there is outdated, it's unreliable. We had tons of clients that say, hey, I found this property. Not that we wouldn't check, but almost 99% of the time that we check, the property is either pending, went under contract, or it has been sold. And the reason why is these websites are designed to sell leads to us, the agents. So whenever there's a property in there that has a lot of traffic, what happens is they leave it a little longer just to get you to commit to it. So when we set you up on an MLS or you search on our website, that is the most updated, most real-time information regarding that house. Okay? Let's talk a little bit about home classifications. We have 4 type of home classifications. You have your traditional sale. This is a home that the seller is not in distress. They're probably making a profit, okay? They are sometimes, unfortunately, they're probably maybe getting divorced. So they need to sell. So this is essentially a regular sale. They're not behind on their mortgage. It's one of the perfect scenarios. The responses on our offers are usually anywhere between 24 to 72 hours. So your realtor will be able to guide you how aggressive we need to be on the offer responses. Then you have your bank owns. These are homes that went through the foreclosure process. The bank owns the home now, and they put it up for sale. They typically respond between 3 to 5 business days. So they take a little longer, okay, to answer. You have the new homes and new constructions. The seller is a developer and can make an immediate contract if the lot or inventory home is available. So those 3 we recommend highly. Those 3, the top 3. Short sales, because the economy is doing very well, not a lot of people are losing their homes. So you don't have a lot of short sales. And the ones that you do find, they take a little longer to get an answer from the bank. So essentially the seller is losing their home. They owe more money than the home market value. Therefore, they're trying to convince the seller, the owner of the home is trying to convince the bank to sell it at a shorter amount of money than what they owe. Those are taking around 6 months to a year, depending on where they are on the short sale process. And sometimes they don't go through. I had experiences with clients that they love their home. We put in an offer. 3 months down the line, the bank finally answered. They say they're going to do an appraisal. They do the appraisal, and then everything falls through. So why? Because we're in a market where the homes continue to increase in price. By the time they get an answer, the home already picked up value. So we don't recommend the short sales. Of course, if that's what you want to do, then great. For owner occupants, for your primary home, it's going to be very stressful to get a short sale. If you're an investor, we recommend them. You can wait. That's not a problem. But if you are an owner occupant, you're going to be living in the home, that is not one that we recommend. Although, if that's what you want to do, we'll be more than happy to serve you there as well. Loan programs, and I'm going to go really quickly on this one because Elgin's going to cover it. But there are many, many loan programs out there. Most common one is the FHA loan. It's the most flexible when it comes to credit, and you got to put 3.5% down. Later on today, we're going to cover some down payment assistance programs that are available to you if you're a first-time home buyer and you have the credit to support it. Conventional loan, you can put as low as 3% down. Most people assume that you can get a conventional loan and you have to put a huge down payment. That is not the case. If your credit is sufficient and it's good, and he will cover what that is, you can put as little as 3% down. The most typical one is 5, 10% down, but you could do as little as 3. BA loan, if you're a veteran, as you know, you have a lot of benefits. Buying a home, it's one of them. So you get 100% loan to value, which means you don't have to put any down payment. And then that applies also for USD aid. USD aid, it's basically rural communities. Communities that the U.S. Department of Agriculture have provided government-backed loans. And that's so here in Orlando, you're not going to find any USD aid properties, right? But you may find some in, maybe Winter Haven, Haines City, some parts of Claremont, some parts of Winter Garden. So those are the areas that would be covered under USD aid. And in some areas, by the way. And then jumbo loan and foreign nationals. Jumbo loans is more a higher price home. You could do loans for those. Foreign nationals essentially are people that are not residents, they're not U.S. citizens, so they're able to do that. That's 75% loan to value. And you have construction to perm loans. Construction to perm loans, basically you buy the lot, you buy the land, and then you want to build a custom-made home. Those are a little different when it comes to the loan process. There's going to be draws that the bank is going to give out, and you got to pay a mortgage little by little until the home is built. But he will cover that in a few. Now let's talk about closing costs. Closing costs can range between 4 to 5% of the purchase price. I've seen it a little lower, as low as maybe 3.5–3%, because closing costs can vary on some aspects of the actual prepaids, HOA startup fees, and that sort of thing. So what are closing costs? Everyone always asks that. One, you have your loan fees. The lender has to make some money to provide you this loan. You have your government fees. The government also is going to make some money in the process. Settlement fees are your title fees. Title's going to do a survey. Title's going to make sure your title is clean, that there are no issues, no liens on the property, no title issues. They're going to do a series of jobs that will cost money, and they're also going to charge you a settlement fee, which is how they get paid. And then you have your HOA startup fees, prepaids, which is your property taxes, your home insurance, and our processing fee at the office. Seller can contribute towards buyer's closing costs. They can actually do that. Of course, we are in a seller's market, so some homes require that we are, some homes require that we're aggressive. Some homes require that we try to tread lightly on how aggressive we're going to be. But we will negotiate seller contributions for you if needed. So if you have just enough money for the transaction, you need to have some reserves maybe for the type of loan that you have, your agents will definitely negotiate seller closing costs. And that basically means that the seller would contribute towards your closing costs on your behalf. Now let's talk about the funds and timeline. Basically, we find a home, and we have to put on the offer some terms that will take us through the process of the loan. On that offer, you need to have a deposit. We recommend to have an average of 1%. So if the home is $200,000, that represents a $2,000 deposit, okay? That's your escrow deposit. That gets credited to your final balance. It's part of your down payment or your closing costs, depending on the loan you're getting. And it could be higher depending on the purchase price. But the typical deposit is 1% of the purchase price. And you need to put that in. Once they accept the offer, you need to turn that into title within 48 to 72 hours. Title holds it while you're doing the loan, and then that gets credited to you at the end. Home inspections, they're typically between $350 to $400. Home inspections are optional, but we'd recommend that you definitely do a home inspection. We're always going to recommend it. All of our agents will. It is up to you whether you want to do it or not. We recommend it. I had some clients that have done it, some clients that have not. And, the nightmares have been, have been there whenever they don't. So always, always do a home inspection. It would alleviate all your concerns. We know what to do at that point, whether we need to request for repairs or perhaps ask for seller concessions so that you can do the repairs upon closing. And then appraisal, which is ordered by the lender and is done through a third party, is around $550, typically 2 weeks after the offer has been accepted, okay? And then obviously at the end, you got to pay the remaining of your down payment and closing costs unless you got seller contributions, perhaps you got down payment assistance. So in that case, you would just do whatever the balance is. Closing takes, depending on the loan, anywhere between 30 to 45 days. And if the lender has done a good job of obtaining all of your paperwork up front, which we do that here a lot, we want to make sure you're not pre-qualified but pre-approved. All the paperwork has been turned in. We can close even as little as 20 days. So even sometimes sooner we're done if we have to. But the typical is 30 to 45 days.
You and I had that one for 5 days.
We did one for 5 days, which is incredible. So now where are we on the real estate market? There has been an increase in average price of 10% in the last 3 years. This has been ongoing for at least 5 years, but the last 3 years definitely at least 10%. there's a low supply of inventory. Okay? A lot of buyers, not a lot of sellers. So it's been a seller's market for the last few years, and the average home has been selling at listing price or above. So don't get discouraged. Whenever we put offers, sometimes we're going to get multiple offers, situations where we have to go back to you and say, hey, they have multiple offers. We have to make our offer a little bit more attractive. I suggest this. And then sometimes it works and sometimes it doesn't. But you know what? The house wasn't meant if it's a no. And that's the way that's got to be your mindset through the process. If it's meant for me, it will happen. And if it's not, then that's what God wanted. Simple as that, okay? All right, so with that, I would like to bring Mr. Elgin here. As you guys met him earlier, he's going to cover a little bit more when it comes to the home financing. Any questions there so far? Please, feel free to participate. Any questions? Good stuff. I'll pass it on to Elgin. Thank you, guys.
Thank you guys so much again. So we'll get started a couple things. Again, I told you guys a little bit about who we are as a company, who I am. And Ariel covered quite a lot, and I'm going to cover a lot too. I don't want you to feel overwhelmed. I don't want you to feel discouraged. I want you to ask questions because the goal here is to educate you. The goal here isn't to scare you away, steer you away. So that way, when you're going out there and you're making that offer and you're making this purchase, you know exactly what you're getting into, and you know, and we have seen where a lot of people are not. They're like, yep, go buy that $200,000 house. They put in an offer, and then when they close and everything, I've seen clients that didn't even know what their payment was going to be. That is not our goal here, just so you know. I'm also probably going to use some terms that you might have not heard before. If you don't, and I use them, I apologize. Feel free to raise your hand and ask me what it means. It's just, I've been doing this for so long, I forget. And I just know that about myself, okay? On that note, let's go ahead and get started. So what I do want to go ahead and get started on is a couple things Ariel did cover. He covered, and we have multiple different loan programs. So what does that mean? What that means to you is that this isn't like purchasing a car. This isn't like applying for a credit card, where it's kind of simple. You apply for a car loan. How much is the car loan? How much is the car worth, right? Mm-hmm. Do I need a down payment or not? Most of us try to negotiate no down payment. Sometimes the dealer might tell you or whoever, oh, well, you got to at least pay your taxes. So kind of like closing cost fees. Even when you buy a car, you might have sales tax, title fees, tag fees. And I use that because it's something we've all already, most of us have done, something we can relate to. So same thing there. The difference is that when you buy a car, really the only things you can negotiate are term and interest rate. That's it, right? Depending on your credit, depends how little down payment you can put down. But term and interest rate is really what you negotiate. On a home loan, it's not like that. On a home loan, we're going to look at several things. Credit score. What's the minimum credit score we take? Believe it or not, you're probably going to be shocked, but it's all the way down to 500. Yeah, exactly. I saw something like, what? Well, no, that doesn't mean you get away with the 3.5% down. That means you got to give me 20% down, maybe even 30% down. There's a catch. It's not simple. Okay. Same thing. What if I want? What if I'm a first-time home buyer? Well, what does first-time home buyer mean? For you, it means I've never owned a home, right? For me, it does not mean that. For the lender, in our definition, it's actually very complicated. And that's why I love doing this, is because that's our job. So what's a first-time home buyer to us? First off, it's someone that hasn't owned a home in the last 3 years. That's the first part of it. So if you haven't owned a home in the last 3 years, you're a first-time home buyer event. All you have to do is prove that to me. So 3 years worth of a rental agreement would prove that, especially if you've lived there, your driver's license matched that. With utilities, yeah, you've been renting for the last 3 years. First-time home buyer. Your tax returns, because if you have a mortgage, you get tax write-offs. You get to write off your interest. Sometimes your property taxes, sometimes other things. So here's your tax returns. What proof you're a first-time home buyer? Well, Elgin, what if I've owned a home, but I've never lived in it? I bought it as an investment property. So technically, I personally have never been a first-time home buyer. Yeah, I bought a home. I didn't live in it. Well, guess what? You're a first-time home buyer still. You get all the benefits. And this is how we're different. As we know these rules, we know these educations, we know these, I call them loopholes, or reading between the lines, because we use it to our advantage. What does it really mean? So you might have a friend that doesn't think that they're a first-time home buyer, because maybe they lost a home 7 years ago, or maybe they sold a home 5 years ago. And no one says they're first-time home buyers. They get all the benefits. Okay, there's other things, credit score, there's income limits, and each program and each amount of loan and what you're doing will determine what those keys are. And just so you're aware, we actually have over 40 different loan programs. So that's a lot. So it is our job, when we go ahead and take your information, to try and narrow it down to the top 3. And then present to you the top 3. And because that's the way we like to do business, in today's example, I will actually be going over 3 examples. So you get an idea of what this experience is like, what it feels like, what it looks like, and really an idea of what real cost is. Instead of, oh, it's the percentage of this or that, I actually like to dive into it and make this, for me it's fun. I'm a nerd, I love numbers, so it's kind of cool. So yeah, so that's why I do it that way. So that's a difference. One other fun rule I like to talk about out there, because a lot of people think that this will stop them from buying a home loan, so I'd like to address it up front, is they always say, oh, you need 2 years of employment. Have you guys heard that one before?
Mm-hmm.
What does that mean? Does that mean 2 years of employment at the same location?
No, just 2 years.
Okay, but what does that mean? 2 years of employment in the same field, in the same job title? There's a lot of variables. Depends why. I had a client not that long ago who had been working at Walmart for a long, long time and finally left Walmart and became a driver, and all of a sudden his pay raise was like $10 more an hour. Well, should that client be penalized because he's never been in the driving industry before? Well, no, it made sense. Why am I leaving? A, the whole time behind the scenes, I've been getting my CDL, and I can prove that. So that makes sense. And B, financially, I'm improving my whole family situation, and I've been working on that. So by knowing the story, I can fix that. What happens when you apply online though? What happens when you just go onto a computer and you don't talk to a live person? Or you talk to someone that just doesn't know what they're doing, because believe it or not, at banks, the bank is licensed. A Bank of America, and I use them just because they're so big, or Wells Fargo, Chase, they're licensed. Their employees are not licensed. Their employees are hourly employees. I know this because I have a really good friend who runs Bank of America Division mortgage side for all of Central Florida. So him and I speak, and we tease each other all the time. But more importantly, his employees don't have to be licensed. While my employees, every single one must pass the national exam. If they don't, they can't be employed here. If they don't take their continuing educations, they can't be employed here. Why is it so important for me to have these criteria? It's so I know they can guide me. Because, for example, FHA, that he mentioned, the handbook of rules and guidelines, it's over 440 pages long. That's just one loan program. And I bring this to perspective so you understand that knowledge and expertise is extremely important. No different than when you pick a doctor, and when you pick a lawyer, and you pick an accountant, or you pick a realtor. Picking a part-time realtor, someone that does this part-time on the side. Oh yeah, I'm a friend, or I'm a family member. Yeah, I got my real estate license. I'll show you a couple homes. It's completely different than someone that has given up their livelihood to take on a 100% commission job their whole life because they trust that they will succeed, and they dive into it and they learn it in and out. And that's very, very important to me for you guys to understand what the difference is. With that being said, let's dive into boringness, as I call it, numbers, and have a little fun here. So a couple things. Here, I've gone ahead and I've done the FHA loan, the conventional loan, and then this one says FHA bond. The word bond, anytime you see this anywhere on my screen or anywhere when we're talking, that means that there is tied to that loan some kind of down payment help. And the word you'll see here, in this case, the word parentheses, $7,500, Because in this scenario, currently in Orange County, as of today, Osceola County, Lake County, Polk County, the down payment assistance that most people qualify for is actually $7,500. I say most because there are advertisements out there that you can get up to $30,000. I will tell you, as long as I've been doing this, and as long as I know other people doing this, the criteria that they make you jump through to get that, rarely it happens. So we like to live in the real world. So I'm going to give you real world expectations so we're on the same page. So let's dial that back a little bit. So let's talk about FHA. The last thing I've done here to make everything comparable is I've gone ahead and put everything at the same purchase price. So we can compare apples to apples. So 3.5% of 200,000, simple. Your down payment here, $7,000. Conventional, $3,000. Can anyone tell me why it's negative $500 on the FHA bond?
Because your bond is 75.
Correct. So there's an extra $500 we actually got to keep, and we actually get to use that money to help against your closing costs. So that's why it says that. Because there is leftover. The only amount needed was the 7. Perfect. Let's use that money to help against your closing cost fees. So that's exactly right. Another difference that we'll notice most of the time, obviously it's all based on scenario to scenario, when you are not getting down payment assistance, your interest rates can be lower than when you get down payment assistance, and I will go over that in just a second. Let's get that screen up here. Awesome. So, interest rates, again, for the most part, especially lately, I should have adjusted this, I apologize. In the last 30 days, one of the things that we've seen is interest rates have dropped drastically. Okay? Yeah, they're going down. It's a great time to start looking again. It's a great time to buy, it's a great time to refinance. So that's exciting. With that being said, rates are going down. However, when you're getting bond or down payment assistance, that interest rate is controlled by the state of Florida. So whether you're a 650 credit score or whether you've worked your butt off to be an 800 credit score, you get the same interest rate as the person with a 650. On traditional loans, it does go off your credit score and you can go up and down accordingly. So at that point, we're going to compare. Like I said, we like to compare options.
For BA now, what's his rate?
Again, a lot of variables. Income. Did you want to take advantage of the 100% VA, or did you actually want to put some money down? And there's also going to be your VA benefits that we have to look at, your eligibility. Let's go to certificate of eligibility. Perfect. And if you didn't, we can actually pull that same day, but we can answer that on a one-on-one, because I will tell you guys, it's not, again, VA also has different tiers and programs. So for me to answer that, I would be giving you, I'd be a salesperson like anyone else. Oh yeah, 3999 or 299, just sign. Well, what did that mean? Was that 10 years? Was that 15 years? Was that 20% down?
No.
That was 0?
I understand that.
And that's why I like to have that conversation. A, so we can address you one-on-one, and B, so we can give you real numbers on your scenario. But that's a great question, and that is how interest works in our world. So, any questions on this? Yep. Okay, awesome. One other thing you will notice on the bond side is that it says the word first and second here. Let me, get these taken here. When I say first and second, well, the first lien, meaning the actual mortgage, is at 5.5 because the bond right now has a higher interest rate than if you went traditional financing. However, it says 7,500 and it says 0%. Elgin here. What does that mean? Well, what that means to you guys is that there is a second lien. That money is actually not technically free. Okay, so the government's giving you $7,500. They're putting it on there as a second lien. However, if you notice, there is no payment. So they're actually not collecting anything on there. So did it help you? Absolutely. Do you have to pay it back? Well, it depends. Okay, how you take care of it. Most of our clients, the way they take care of this is when they sell the house, by going back through their realtors, reassure them that they're making enough profit on the house that it doesn't come out of their pocket. It just comes out of their equity. Every once in a while, for example, from February, I think it was February this year, I think it ended for about 60 days. Osceola County ran a special on the down payment assistance, and they were forgiven it if you lived in it for 5 years. So these programs are changing all the time. Understand? So it's not the same one. So it's important to ask questions. And when you're sitting down with my guys, ask them, hey, when is mine forgiven? When isn't it forgiven? Do I actually have to pay for it? These are questions you wouldn't know to ask because you hear the word down payment assistance. As a consumer, you would assume it's free. You would assume it doesn't stay on there. Well, it depends is the actual answer. And that would be the honest answer. Okay?
And with your interest rate being higher with the down payment assistance, isn't that you paying it back?
It is. See, you're catching on. So the government doesn't, but that's how the government is able to assist you. However, it still can make sense. And I will show you that in a moment. So we really look at each scenario because we will have clients that the down payment assistance is the best program.
Okay.
Just so you know, it is. We have it all the time. We use it all the time. I would say 20, 30, on average, on the high end, 30, 35% of our loans on a month will be bond. Okay, so it's not at all, again, it's not here to discourage you. It's here to encourage you and educate you. So then when we sit down with you, you know, okay, this is why they're telling me I should go this route, whether it is the bond, or we might say, you know what, for you, if you're able to do this and this, you're better off without it, and here is why. It is not, because one important thing, again, I'm transparent. No one here gets paid any differently, no matter what type of loan you pick. If you don't get paid differently, no matter what your interest rate is. And I'm just that transparent. Because some people will get the perception that, hey, if they charge me a higher interest, they make more money. Hey, maybe if they don't do this, that's not here. And that's important for you to understand that. Okay? I think it is. And I want to make sure that it's that transparent through everything. Any other questions on here? Cool. So let's go talk about the payment. Well, how does this all affect my payment now, Jen? You've had different interest rates. You've had different down payments. You've had help or no help. You had a question? Well, it can affect it in a couple different ways. And your payment's made up of a couple different things. Let me ask you something. Anyone here has ever been online or driven somewhere and they see, oh, buy this $200,000 home for $1,000 a month?
Yeah.
Yeah.
I've seen it.
You've seen it? Do you know why they do that and why they get away with that advertising?
That's
Okay.
just the lure.
Oh, it is. Have any of you ever been seen a car advertisement? Car payment 000 down, 200 a month, 199.
Yeah.
Yeah, right.
Hold on.
And then when you get there, it's not that, right? Well, what did they forget? Well, they didn't forget. We didn't read the fine print because the job is to catch our eye and get us excited. Because they are sales, and our economy runs on marketing, right? I'm just again, it does. So what they did is they got you excited, they got you in the door, and you forgot. Oh yeah, you got to pay Uncle Sam the taxes. It's not my responsibility. Those are taxes. It's no different than you walking into Walmart, buying something, going to check out, and be like, well, it said it was $7, and now it's $7.21.
Right.
Right? How's that any different? It's not. Neither place like. It's just the way we do business. Why? Because in the state of Florida or in the U.S., each county gets to add different taxes. County tax, state tax, blah, blah, blah. We're not in Europe, where in Europe they actually disclose everything up front because there's only one tax in the whole country of Europe. Different way of doing business. And that's why. What else don't they tell you? Registration. Again, you're talking about title fees. Again, closing cost fees. What don't you know? Well, what type of loan did you qualify for in the first place? How much down payment do I need? What do I qualify for? What do you qualify for? That's going to vary. However, there is something that's called principal and interest, and that's the part that they're advertising. So let's go through that. FHA, I needed 3.5. That was $7,000. At 4.99, my principal and interest would be that. Cool. I legally can advertise that. That's principal and interest. On the conventional, I needed $6,000 down. Doesn't have other fees, it's actually lower, and lower down payment. And on the bond, because the rate was higher, the payment's a little higher. Okay? So what goes into a payment once you get there? Well, we talked about taxes. You gotta pay property tax. Property tax can be handled one or two ways. You can pay it monthly, or you can pay it once a year. paying it once a year means you write a big old check for $2,000, $3,000, for whatever that is, once a year for that amount, so it's not part of your monthly payment. Why? It's not part of your mortgage. However, most of us don't have that luxury. We just don't. We as the lender, we offer it. If you notice, the reason why it's separated is because we don't charge any interest. We don't charge any additional fees. It is a free savings account that we're collecting. It's like you having a house savings plan. Right? We're just putting in money for free, and then at the end of the year, when we get the bill, cool, this is how much it's owed, we grab it from there, and we pay for it for you. And you just keep paying and paying into it. And then if your property taxes go down, and then you put in a little bit less, put a little bit more. It's just a savings account. It's really what it is. So we can go ahead and write a check for you without you having to think about it. And more importantly, we're helping you be successful in keeping your home and budgeting for it. So it's teamwork. What else do we have on there? Hazard insurance. What's hazard insurance? Homeowner's insurance. What do you need on a car payment when you go buy a car? What do you need? Auto insurance. Well, how good is a car if the payment's $100 a month, but the auto insurance is $600 a month? And the reason I'll share a little bit about this, I was in the auto industry for 9 years as a finance director, so that's why I compare a lot to that, just so you guys know. So this is all correlation for me. So again, I apologize, but I feel like it's something every consumer, every client, and every borrower has gone through at some point. And you've either had a great experience buying a car, or you've had an absolute miserable experience buying a car. And it's not because of the dealership, it's because it's still a people business. And this is no different. You still can't do it all. If you do it online, you still won't get the same experience. So it's finding the right person. No different than a lawyer, again, no different than anything else. Doctor, you can go to doctors, have a great doctor experience, have an absolutely horrible one. And then we have mortgage insurance. What is a mortgage insurance? Can anyone tell me what mortgage insurance is?
That's the insurance for the loan to protect the home.
Who's it protecting?
The bank.
Man, you're cheating, you're a realtor. Get out of here, bro.
I used to do that in school.
I know, it's all good. So yes, it protects the bank. What's it protect the bank from?
The money to give me.
The
Default.
money to give you?
Default.
Default, yes, that's it. So what really is it? Does it benefit you? No, it's a bunch of garbage. Bunch of garbage insurance. That's what it is. We can't get away with it unless there are ways to go around it. Putting 20% down. We have other programs that you have absolutely excellent credit. You're able to put a little bit of money down. It can be avoided. You can go ahead and prepay it up front so it's not part of your monthly payment. So there are certain rules that can help us work around that. Depending on the program, if you see here, we have different variables on the payment. Why? Because it's all going to depend on credit, down payment, loan program. So that can also vary. We're going to quarantine. As of today, it is actually something that's going through legislation right now. But as of today, if you get an FHA loan, that PMI payment, that mortgage insurance is stuck on there for the life of the loan. The only way to get rid of it is to be refinanced later on when you have enough equity into a conventional. So one of the things I mentioned is legislation. Well, how do I know? We stay up to date. They're literally working on passing so it can be taken off after you get to a certain amount of equity because there is no longer the risk there. Because if you do default at that point, now the bank can take the house, sell it, and they would make their money anyways. That's the idea behind it. Conventional loans. On conventional loans, it's on there minimally, if you put the minimum down for at least,
You're gonna cover it.
good? On a conventional loan, again, minimum of 5% down or 3% down, depending on what you qualify for. It's gonna be on there. When you get to 20% equity, and there's 20% equity in your house, and you only owe 80% of the loan amount, you can then request at that point to reevaluate and they can drop it off without having to refinance. So that's really cool. A lot of times we see borrowers do that. A lot of times we see borrowers that we start them out in an FHA loan, and just like an accountant and just like a doctor, we call you once a year to evaluate your house scenario, see if it makes sense. Just like you would evaluate your health at least once a year. Just like you would evaluate your health situation, your credit situation. We're no different. We're here to build a relationship. It's not a one-time transaction. We're going to keep following up and bugging you. Because maybe you didn't qualify for the best program today, but it still makes sense for you to get into the house today versus renting. But we can put you in a better financial situation in the future. And we're going to continue to guide you through that, whether it's fixing your credit, whether it's helping you do this or other items that we know of that will do that. And lastly, we have the bond program. So that has it as well. So then what happens? At the very end, you have a grand total payment that on the exact same purchase price, on the exact same property taxes, and the same homeowner's insurance, you have 3 different payments. Yes?
Hey, Elgin, so I just wanted to bring up, I know we're talking about PMI and how, every loan has it and
Yes,
how
sir.
it can be taken out. But I think, I don't know if there's any veterans in here, with the VA loan, they're exempt from PMI, right?
Yes and no.
Okay.
And I will be going into that, but that's a great question. So I know we have, you are exempt from it monthly. Depending on your eligibility, they have what's called a funding fee up front, which is basically that they're collecting up front. And depending on what you're eligible for, you can finance that or you have to pay for it part of your closing costs. So technically, no, there is no PMI monthly.
It depends, right?
It depends. So that's why your eligibility certificate that has a bunch of like weird coding, E321, blah, blah, blah. That means a lot to us. But no, that is great. It just doesn't mean monthly, and absolutely they never charge a monthly. But understand that bless you.
And there are no paid taxes, right?
Again, it depends. Depends.
Okay.
Level of disability, level of this. There's a lot that goes to it, and that is actually directly with the county, not with the loan, not with the lender or your realtor.
Okay.
Yeah, but I can tell you, hey, based on what you're telling me, there's a very high chance that, yeah, because obviously we do this for a living.
Okay.
Yeah, and we can show you, we can help you through that once you own the home. Absolutely. Yeah, there are ways to, for you guys to get tax exempt, or if not tax exempt, get additional tax deductions that will help you monthly. Yeah, absolutely. But again, as I was saying, different payments here all around, just depending on the loan program. So a lot of information, right? Probably a little overwhelming, as I mentioned. Any questions on any of that part? No? So now we're gonna go to dreaded closing costs. So one of the things Ariel said is that closing costs can be anywhere from 4 to 5%. And that is a very good number to use when you're out there looking. You don't do this for a living. The reality of it is that it's gonna vary from house to house, and there is actually not percentage to be exact. There's actually very calculated fees for each house. And I know that's gonna be like, oh, what does all that mean? Yeah, let's not get into that because that's gonna overwhelm you. When we find your particular scenario, when we find your particular loan type, we're gonna say, hey, you're gonna qualify for this around about, so in your case, it's gonna be about here. But then understand very specifically, once you actually find the exact house you wanna purchase, then we're gonna be like, on that particular house, it should be about here. Why? Because now we know the exact property taxes, we know the exact insurance, and that's why they get adjusted. And that's why numbers are changing sometimes. So that's gonna be very important, but let's get an idea of what this means. So let's go through FHA. So FHA requires that you put at least $7,000 down on a $200,000 loan. Well, then you have all of those scary fees. So let's go through a couple of basic ones. Processing fee, underwriting fee. That's from us, the lender. Ariel mentioned we charge closing costs, about $1,395, $1,400. That is what our, we'd say all of Central Florida, pretty much, whether you're at Bank of America, we all charge. We try to stay competitive, so we're looking at what the market's doing, treat everyone equally, it is what it is. From there, you have an appraisal fee. Can anyone tell me what your appraisal does?
They tell you the value of the home.
They tell you the value of a home, but it's from a third party who is not interested whether you do or don't buy the house. Why is that so important? So you can get an honest evaluation of what you're buying. If it's up to us, we want it to appraise because it makes the lending process easier. Because guess what? If the house under appraises, meaning that it comes in less value than what you're offering, you have to come up with that difference. So we don't want that because we don't want you having to come up with more money. But you also still want that real appraised value. If it's up to the listing agent, they're going to want it to appraise as high as humanly possible because, well, that looks great for their seller. And the buyer's agent is just going to want it to also be at value because they just want you not to have to stress out, worry about more, or they're even going to want it to be higher because then that means that you're walking into a house with a lot of equity. So So it's a good thing if it appraises higher. That's money in your pocket the moment you're walking in. I had one come in the other day, yesterday, $7,000 higher. If the client hasn't even bought the house and they have $7,000 in equity already. That's exciting. It's pretty cool. That's what that does. That is mandatory when you are financing. It is not at all if you pay cash, but it is mandatory when you're financing because we are the bank and we are giving you a collateral and we got to know what that collateral is worth. Just no different than a car. Okay? Full credit. Okay? Understand we don't ever charge any of these fees unless you close on the house. So all the services you will get until then are completely free. All the advice, everything. Even if you don't buy a house for 3 years. Even if you don't buy a house for 5 years. And they never go up because of any of that. They stay the exact same. Okay? Then you have lender's title insurance. Okay? Owner's title insurance. Well, what's this stuff do for you? This stuff is protecting you. These are insurances that are ensuring that no one else can put a lien on the house. That no one else had a lien on the house. So let's say you buy it, and the previous owner was doing some roof work and never ended up finishing that contractor, paying them. Well, legally that contractor can put a lien on that house. Well, you don't want to walk into that blindly. So by getting these, you've been protected. No one can come after you. That's why the title company is involved, the title endorsement, all these other fees to make sure that everything's been cleared. And then you have all your county taxes and reserves that go into here. In this part down here, it's going to say towards your prepaids. Those right there, those are, remember I talked about that savings account for your taxes and everything? Well, we got to start it up. So there's some startup fees that you pay the purchase closing costs to make all that happen. And again, this is all going to vary based on the house, the taxes on it, insurance needed. So now that I've gone through all that, well, on an FHA loan on a 200,000 house, that means you need 15 grand. Ah, scary. It's a lot of money. Okay, not so scary when you got the right people. Why? Well, we talked about that you got to put a deposit. So let's say you put 2 grand down. Well, now that's down to 13.6, but you still was your money. Well, what if the agent negotiated similar costs? Where's Team Lopez? Hey, Santos.
Hello.
They got $8,500 for their buyer yesterday. That's what they did yesterday. And they sat there, what, like 5 hours negotiating?
Yeah.
Yeah? I'm surprised you're here today. Great job, by the way. He helped a family that had just enough for the down payment. They sat there and negotiated for 4 or 5 hours until they got that seller to pay all the closing costs. So what does that mean? Well, that means that, well, that went down by $8,500. That's a lot of money. So what are other ways we can get creative? Well, let's say they know that the house you could offer $5,000 less. Well, maybe you don't offer $5,000 less. Maybe you offer $2,000 more, but then ask for $7,000 back in seller. Because what's 2 grand going to do to your payment? Anyone? If you finance $2,000 in a loan, can anyone tell me what that does to your payment? Huh?
1 second.
Maybe $12, $14 a month for $2,000. Why? Because you're financing over 30 years. You sometimes forget that. Remember, this is not like buying a car. You're not financing it in 5 years, 6 years, for 30 years. So it really doesn't make that big of a difference. I'm not saying that, we couldn't use $15 a month in our pocket. But I'm saying I'd rather spend $15 more a month and keep $2,000 in my pocket today. And the reason we work so well together is because we communicate all these things up front. So when you go to negotiate, when you go to do whatever it is we need you to do, we're on the same page. So we spent, I think, 2 weeks with those clients, getting them pre-approved up front before they even looked at houses. So then when we went, hey, we knew what they wanted exactly, we knew what they qualified exactly, and we knew how to negotiate appropriately. And we're not just out there aimlessly, and they didn't just put in an offer on the house. They didn't get that seller credit, they put in a deposit, and then all of a sudden the client's like, oh, I don't have that kind of money. No, we addressed all that up front. So it can be as smooth as we can make it transaction. Okay? So how's that different conventional? Well, conventional only needed $6,000 down, it was 3%. So I'm gonna go through this a little quicker because I know you guys might be getting bored of the numbers. So a little bit less. Why? The down payment was less. Closing cost didn't change. How did the bond help us? Well, you had $500 left over, plus the down payment got covered. But the state of Florida, they don't make it easy when they're giving you money. They have additional fees, origination fees and other fees, admin fees. So it kind of offsets them, but it still helps a lot because now I only need 10 grand. And then if they negotiated $4,000, I would have only needed 6 grand. So that's why I said that down payment assistance still helps a lot. Because you can get into a house. You can get into a house that's, I try to tell people, it's a 401k account. You look at it, it's a savings account. Because when you're in there, you're investing in yourself. You're living in it and investing in it. Where you can't do that when you're renting. Any questions on any of this? Man, you guys are lying. I think you're doing a really good job or clueless. Alright. Couple last things I want to touch base on here. Orlando's market is something I know Gary was talking about on the purchasing and how it's been going up and up and up. We believe even if the economy does whatever it does everywhere else, Florida itself, the southeast region, specifically Orlando and Jacksonville, are pretty unique animals right now. Because we have so much new construction happening. Did you guys see the construction on I-4 and 408? If you guys go to the back of my building, and actually there's an office at the left, feel free to walk in there, that's my office, you can actually see it all, it's really cool. Did you guys know that is the biggest construction project as of today's date in the United States? UCF is opening a campus downtown that's going to bring in 12,000 people in there. Orlando's market is #1 right now in investors. It's #1 right now for how many people are moving in versus leaving. We are in a very unique situation. Because of that, it's very, very important to have the right professionals on your side that know what they're doing so you don't get taken advantage of. And that they just don't care about a dime, they care about you, they care about the customer experience, and they're looking out on you. A couple things is the average rent amount right now is $13.25. And that's for a 2-bedroom apartment. That's not for a house, that's not for anything else. Does anyone know what that average amount, it goes up year over year the last 3 years? 7%. Well, if it was $1,000, 7% would be $70. That means it's going up about $80, $90 year over year. Some of us don't get those pay raises year over year. Some of us haven't seen a pay raise in a while. That can affect our livelihood big time. So very, very important things that we're looking at. That means if you rented for the next 10 years and you didn't take action today, even to get on the path, you're going to waste $200,000 in the next 10 years if you stay renting. And you threw away. It's a lot of money. This is my nerdy side. I love numbers. However, you had that bond program or the FHA program. On average, you have about almost 110 grand, 109, conventional $111,000 sitting there in equity. Even with the down payment assistance, depending on how long you're going to be there, I told you it could make sense. Even paying back that $7,500, you would still make $106,000. So it can make sense. It's important to align yourself, interview, and ask the right questions on your own. Not on what I'm telling you today. My goal is to educate you so you know what to ask. Get that going. Okay. Any questions on any of that? All right. Lastly, to you guys, take part in what we do. A lot of reviews there. So that's pretty awesome. I'm done going over this. So I'm quickly going to open it up for just questions in general, so we can all spend a little time together. So yeah, let's ask away.
Yeah.
Yes, sir.
My question is, so on the FHA loan, when you say you put 3.5% down, then you got all the way through all the other charges, and it said $14,000. and you said this gentleman negotiated yesterday down for,
Let's bring it up.
closing costs, right?
Yep.
So you have to have the 3.5%, and after everything is said and done, it's gonna always come up to the 15, it's like 15,000.
15,360, and again, this is an example, why? Because we don't have an exact property picked out. It could be a few dollars less, it could be a few dollars more. It could be $1,000 less, it could be $1,000 more. At the end of the day, what you have to have is, you do have to have the $7,000 if you are doing FHA. Okay? What you don't have, you know, depending, and this is if you're not getting the bond, you're not getting the down payment assistance.
Right, I'm just talking about the FHA.
Correct, perfect, we're getting there. So yes, if that gentleman or yourself or whoever's helping you cannot negotiate closing costs, that would be accurate. Absolutely, that's why it's so important that you have someone on your side that knows your financial situation.
So it's really more than 3.5%, because I hear this all the time. Before today, I always hear, oh, FHA, you only need 3.5%, but it's actually more when you get down to closing costs.
Advertising,
Right.
Let's
like
go
you were
back.
saying earlier.
so it is not more than 3.5% for the down
Down
payment.
payment, but they don't tell you about the,
Absolutely, there we go, now we're catching on. That's why I told you guys, verbiage, terms are so important. That's why we're here. But yes, absolutely, absolutely, that's accurate. So once you add your closing costs, it's again, no different than a friend of yours saying, oh yeah, I went and bought that for $7. You go there at $7, but then you leave it paying $7.21 because of taxes. And was it $7? $7.21 because you had to pay taxes.
They said that there were, excuse me, that there are some programs that are 100% financed.
Yep, let's talk.
Now, yeah, let's talk about
Yeah,
that.
absolutely, I didn't go over it. There's several. VA, right? Veterans. Love veterans. We have a great Giving to Heroes program. Most of them qualify for 100% financing. Has anyone ever heard of USDA? Okay. USDA are rural areas that are mapped that are okay to do that. Let's actually, since we're here all together.
How much is that process for VA?
What was that?
How much supposed to pay?
The closing costs, it's gonna depend on the house and on, again, the
Yeah.
programs you qualify for, depending if you're exempt from fees or not fees. So we're gonna look at that. And again, on your case, I think the best thing is if you have time when we're done, you will be able to sit down with one of my guys.
Yeah.
They'll be able to answer those one-on-one questions that
Okay.
will be specific to your scenario.
Okay.
But what I do wanna answer is I wanna show you guys this.
Is it same USDA?
This is USDA. what we're
Yeah,
going
it's the
over.
same, similar?
USDA is different, and well, it's similar in the aspect that it's 100% financing. So what does that mean? 100% financing means that you don't have to put the down payment. So like he was asking earlier, the 3.5% down on FHA, well, there's still additional fees. That doesn't mean that you don't have to pay your taxes. That doesn't mean that you don't have to pay your closing cost fees. It just means you don't have to come up with your down payment, okay? Zooming into those. So we got quite a bit of yellow. Alright. So yellow means it does not qualify for USDA. So like, I like using Claremont as an example because Claremont 10 years ago was nothing. Any of you that have been here for a while, and now it's quite a bit of it's yellow. And every year or every 6 months, they update this map and more becomes yellow as it builds up. The idea within USDA is to help families get into houses by helping those areas grow, and that's why. It is 100% financing, okay? There are closing costs, but again, closing costs we can talk about, we can work with you and figure out. That is not a reason not to get the process started. The first step is figuring out what are you able to do? Every single one of you in here will have an absolutely different jigsaw puzzle for us to figure out. And again, our teams here are training and we'll be able to help you do that. So yes, so that is available. As you can see here, it is going to vary. So the biggest catch here is home eligibility, which that's on anything, by the way. You can have a home that doesn't qualify for FHA financing. You might have a home that doesn't qualify for VA. VA, they protect you guys. They make us do termite inspections. They make us do this. And if the owner knows there's a termite issue, Okay, they're not gonna, let us put a VA offer in. If the home has just recently been purchased and it's an investor, you can't put an offer in on FHA for 4 months. Because they don't want you being taken advantage on FHA by an investor. So guess what? Now we just added a whole different arena of, oh man, there might be a home I really like, and because of the type of loan I qualify for, even though I qualify for the loan amount and the purchase price, and maybe I qualify over it by over 100 grand, I still can't purchase it because the property doesn't qualify. Well, why'd you look at it anyways? Would be my question. Or why did your realtor show it to you anyways? They should have not. They're the professionals, not you. Again, so important to be aligned with the right individuals. I know I keep saying that, but that is what I believe, and that's why we partner up with local individuals that do this full time, and we feel that they are the right ones to help you out. Okay? So this is one of them. Believe it or not, the bond program. It's also a lot of times advertised as 100% financing, because again, in this scenario, technically, you financed 100. You didn't have to put the down payment. You just had to figure out closing costs.
Right.
So a lot of times that is advertised like that as well, and legally it can be. There are other programs out there that will allow us to do 0 down or 100% advertising, but it's figuring out your scenario if you do or don't qualify. Lastly, some of these will have income limits, meaning that you can't make more than X amount of money a year or your household. Some of them only look at the people that apply. Some of them actually look at everyone that lives in the house, even though everyone's not going on the loan. So a lot of information, right? Yeah, absolutely. Any other questions? Anyone else?
Can you say more example of what houses doesn't qualify for FHA, like deterioration, windows, roofs, anything that?
For that, it's again gonna go ahead and depend on the house, the age. Yeah, they look at all these things. So what he's talking about is what the appraiser does. So the appraiser doesn't just appraise a house. So you're like, oh man, I'm paying $500 or whatever for them to go just tell me what it's worth. Even though they don't do a home inspection, and they are not home inspectors, they do go out there and they do take pictures. So no, they're not going in the attic. No, they don't bring out tools to see if there's termites. They don't do any of that. But they do take pictures. And if it go and take a picture and there's wood rot and it's obvious, they're going to stipulate that it has to be fixed. They're not going to say by who. They just won't let us insure the loan because we're not going to insure a loan that has wood rot. We don't know why it does. Or if there's roof damage. No, again, he's not going in there to go see if there's leaks in it. I mean, you walk up to the house and you see a big hole in the roof, and it's that obvious. Yeah. So those are going to be things that might have to get addressed. But again, those are things that we worry about scenario by scenario. We unfortunately see them, but we try to avoid them. How do we avoid them? Well, again, the realtor's going out there with you. You're not just going to go out there and look at the house. So that realtor's going to have good knowledge of what's expected, not expected. B, you're paying for that home inspector if you choose to do that. And typically by those two options, we already know if we should even proceed or not proceed with the appraisal.
Who's supposed to be the one to tell you about the home inspection? And the reason why I'm asking is I'm currently in the home buying process.
Okay.
Okay, so I found a house that I like. I put in an offer. The offer was accepted and they said, okay, so you have 7 days to do the inspection. So I hired an inspector, come do an inspection. So now what I'm going through is that the person I was talking to for the homeowner's insurance, he's like, did you do a wind mitigation inspection or a 4-point? What is that? I've never even heard of those. I was just told do an inspection, so that's what I did.
Yep.
Apparently I didn't do the right inspection.
And it's
Who's
not
supposed to be?
That's a
the
great
person
question,
to
so let
tell
me
you?
address that. So, your realtor is your liaison. They are your customer service. They are your concierge. They are your butler. In my professional opinion, it is their job to guide you to the right personnel, not to do their job. There's a clear difference here. It is not their job to tell you what your monthly payment is. It's not their job to tell you what the interest rate is. It's not their job to tell you, hey, this home is this year. I would recommend that we do this inspection. It is their job to put you with a good inspector that's going to inspect you and say, hey, this home is this year. I think you would get benefits if we did a wind mitigation as well. And I think we should do that because you might get some discounts, or you might get this, or they might ask for it. That would be a home inspector's job at the end of the day, in my professional opinion. Why? Because, well, they're the ones that do it for a living, not the realtor. The realtor should be partnered with and be able to refer you to 2 or 3 legally. I think it's 2 or 3. They shouldn't just send you to 1. And we wouldn't be fair to this. And then you choose who you call, you interview, and this is why I said the reason we're doing this is so you can interview, you can ask the right questions.
Yeah,
And you're confident.
the home inspector will tell you based on the year of the home, if the wind mitigation it's necessary.
And that's
And
one
they
thing.
didn't do that for
And
you.
they did.
Yeah, and that's one thing. Depending on the year of the house, we do or don't need one. And I say that it's, most homes within 10 years don't need one because they're up to coding, and so you're not going to get any benefits from it. Really, the benefit of a wind mitigation is to get additional discounts on homeowners insurance, because it will tell them if it passes, doesn't pass, or if there's a hurricane, the chances of the roof having issues or not. That's really the idea behind it. So if it's up to code, then boom, they'll give you a little bit lower discount. What you should be able to do is call back that home inspector, speak to him, and address it, and if so, see what they can do to take care of adding that to you. But before you do that, ask your home insurance guy, is it even going to benefit you? Because no different than that guy, you will have home insurance people that they just ask for it to ask for it. They don't know, again, does it benefit, where it does, they're just asking for it. And then all they do is they go, oh, yeah, got it, and these are the results, and the computer spits out information. I make fun of the slogan for Burger King, because it makes me have it. You guys probably heard it, have it your way. Okay. So you can have 1 or 2 things. You can find people that literally are order takers and paper pushers, and all they do is sit behind computers. And I'm not saying there's nothing wrong with this. Please don't think I'm talking bad about it, because it is not my goal. My goal is to say, hey, you really do need a professional.
Okay.
But that they will go ahead and literally just ask what the computer tells them without knowing the why behind it. Why are we asking for a wind mitigation? Why are we asking for this? Why do I need 2 years of bank statements or pay stubs?
Why?
And that's the difference. So I would ask, before you even go through all that, hey, is it even gonna, let's say I did get it, and let's say it was good. Does it even give me a discount on my insurance?
Well, they said it would. The house would.
And then I would ask, okay, well, could you tell me about how much? What if the discount's $5? And it's gonna cost you $100 extra to get this? Was it worth it? So that's, yeah. So I hope you guys are seeing that the knowledge here and the expertise, and hopefully you're learning from all this. Any other questions? Yes, sir.
So is there a way to qualify for 100% financing that's not VA?
Yeah. The USDA, the bond programs, absolutely. Yes. Those are also 100% financing that will help you take care of the down payment portion of it.
For first-time homebuyer?
For a first time or non-first time. USDA does not require you to be a first time home buyer. And then again, on the first time home buyer, it depends what the definition of first time home buyer is, if you remember at the beginning when I started. Yeah, because we have people that, again, they've owned homes, but that doesn't mean that they don't qualify.
No home ever owned.
First time home buyer. That's easy, yes. Yes, that's an easy one.
Yeah, but you're also a first-time home buyer if you haven't owned a home in the last 3 years.
I'm just talking about never owned a
Yep,
home.
absolutely.
Yeah, good.
Yes. Yes. And again, if you have any
You're
friends or
extra
family
good, you're
members,
extra first time.
yep, extra first time. But if you have any friends or family members that thought they didn't qualify, and now you hear them say, oh yeah, but, and you know they haven't lived in the home or owned one in 5 years, send them our way. You can be like, oh, you do qualify. Guess what? You're an expert now. You qualify. I know the right people that can help you. Send them our way. Okay? Any other questions? No, keep asking.
If you're a homeowner, but it's not under your name, like say your parents own the house, they pass away, you're the executor of the estate, so technically you own the house, but it's not under your name. Are you still, can you still?
So they passed away, in the state of Florida, every state is different, but in the state of Florida, the estate first takes over if they didn't have a will.
They had a will,
That the will
and
leave
they
it to
made
you.
you executor of the
If
estate.
you go on that deed, automatically for 90% of the time, you have to fill out a couple paperwork, so you go on the deed. You own that house. Do you live in that house?
Yes,
You are a homeowner.
okay.
You are a homeowner.
Um,
Okay? But there are other programs that we can help you with. But yes, technically you are a homeowner. You live in it. Your name is on the deed. Your name is on the title. Yeah, that answer that. But that's again, there's other programs to assist. Absolutely. Any other questions? Nope. Okay.
What do
Awesome.
we have to do to get pre-qualified?
Well, that's where that's where we go on next. So, awesome. So on that note, I think I've answered most of your questions. With that being said, again, thank you so much for all your time. I really, really hope I educated you guys. You got a lot of knowledge out of this today. Just so you know, as I mentioned at the beginning of this, is we have a full staff here today. They're not here just to hang out and look pretty. They're here for you guys. They're here so if you're ready to get pre-approved, you can go ahead and talk to them. They're here that if you want to go ahead and ask more specific scenarios, for example, yourself, you can sit down with one of them. So those questions that you still have that I was unable to answer up here can get addressed, please. I want to make sure that when you leave here today, even if you don't work with us in the future, you at least leave with confidence in what you're doing. And you're able to get help. But they're all here. So the way we're going to be working on that is you all came in on a check-in sheet and you all signed in. We're going to be taking you in that order if you're interested in speaking with one of them. Okay, so when we get out of here, we'll all go out there, sit down, I'm gonna go ahead and call you by name. If you're here in that order, we can go ahead and do that. Okay? The last things I'm really, really asking you guys on all of this is that again, ask anything and everything you need to while you're here today. Take advantage of us. Please don't be scared of asking any question 20 times.
Also, there is no cost associated with getting pre-qualified.
And I do have
Zero cost.
and I do have one last
I
thing.
want to put that out there.
Yeah, that is true. And then one last thing that's really important, that I know you're all gonna ask them, so I'm just gonna address the big elephant in the room now, so you can ask me instead, because if not, I'm gonna go in there and address it anyways. Hey Elgin, if I pull my credit,
They're gonna know.
they're gonna lower my score, yes! Woohoo!
Typical stuff.
Typical stuff. I love to address this question because there is a correct answer and there's an absolutely wrong answer. Someone give me the wrong answer, please.
I think my score dropped 50 points.
Wrong answer, yes. Pull my credit, my score drops 50 points.
They're gonna put it like 20 times.
They're gonna pull like 20 times, yes. That's accurate.
It's like buying a car. It's not. What else?
I'm gonna address it right now. I think you probably have noticed up here that I show you everything with facts. I'm going to a third-party website, education. How many credit scores do you guys have?
3.
28.
I learned something today.
28. 28 different credit scores. Why do we have 28 different credit scores?
Different categories in credit.
Thank you. Yes, I should have had giveaway prizes for this. We'll work on that next time. See, that's why we record this, so we can work on this. Do little giveaways. See who has some of these answers. Realtors will not qualify for the giveaway prizes. Lost. And I know, but we're almost done here. We'll make sure we're done by 12 here, so we have plenty of time out there, guys. So what you do have is you have 3 major reporting companies: Experian, Equifax, TransUnion. Those are 3 companies that have decided very, very early on in the U.S. and they decided to create credit scores and social securities to gather a bunch of information to decide to rate you if you're financially worthy of being able to purchase certain items. So it was easier. Okay? Who here uses Credit Karma? How does Credit Karma give you your credit score for free? How?
Great question. It's all
And they only give you 2 or 1.
First of all,
somebody is advertising.
first of all, they decided to come up with their own credit score. So the first thing we got wrong from them is they're not even giving you any of the 28 credit scores that all major lenders use. So when you're like, oh man, I'm a 700 credit score on Credit Karma, and then you go apply, and you're either a 750 or a 650, why is it wrong? Well, you had the wrong information to begin with. Look at their app, on the little fine print, they call it a Vantage score. Why? Someone was very, very smart in early, I think it was like 2010. I paid, again, nerd, I read too much information sometimes in this ring. 2010, really smart though, when apps were becoming famous, and thought it would be great to come up with your own formula on how to offer credit scores. So A, inaccurate. And then they decided to offer it for free by having people create a login. Well, to create a login, now you're giving your name, sometimes your social, sometimes your email, sometimes your phone number. Free marketing.
Requalification for that. Requalification
Yes.
for that.
The most money used every single year for the last, I think, 7 years in a row, I think 6 or 7, but 6 or 7 years in a row in the US for marketing has been on credit cards. They spend the most money on advertising than any other industry. So Credit Karma has a great model by just gathering information, sending it to them, allowing them to advertise, and just charging all the fees to them to advertise to you. They make a buttloads of money off you just creating the login. Imagine, great business model. I'm upset that I was like, I don't know, 10 years old at that time, and I'm 12 today, so yeah. That being said, so difference here. We'll go a little bit through again just so we're educated. So the first reason why it's wrong from Credit Karma is we're already pulling the wrong credit score. The second thing is, it depends what you're applying for. So if I today applied for a credit card, if I today applied for an auto loan, and if I today applied for a mortgage, the question now becomes, do I get the same credit score all 3 times?
No.
No. If you are uneducated on this information, I don't mean educated, but on this information, you would assume if your score came down, was lower every time, that the reason why is because they pulled my credit. That's what we would assume. It's not correct. The real answer is your credit score was different all 3 times to begin with before it was even pulled. That is the real truth. And I'm going to go into a harsher truth in just a second. With that being said, what does a credit inquiry, to answer your question, how does that affect my credit score? Well, it makes up 3% of your total score. Can anyone tell me what's the lowest credit score you can have? 0. There it goes. And once you actually start creating it, it can go as little as, I think you were going to say 250. No.
We were going to say 400.
No. I've seen 300s. Yeah,
That's true.
I've seen it. Yeah, I've been doing financing 10 years. I've seen it a lot. But really 0. What's the highest you can go?
850?
Well, if you look up here, see, newly released version, these are going to go all the way up to 900. So they're changing it. But let's go ahead and use that scale. From 0 to 900, we'll do math. 450. From 0 to 900, if a credit inquiry affects your credit score, 3% of your credit score, how many points would that lower?
What, 900?
Yeah, so from 900 to 0, if you pulled your credit one time, 3% of that would be like 0.003-ish, something like that. So therefore, one credit inquiry can't even lower your credit score. It can't. When you have 10, 20, 25, that starts going. But even then, when you look at math, it would mean that we need about 30 credit inquiries before it lowered us 5 to 10 points. So now the question becomes, well, why in the world is everyone telling me, don't go pull my credit? I'm gonna get declined, it's gonna lower my score. Well, I'm gonna tell you, I was a victim of that. I told you guys I was in the car industry, right? I sold cars, I was 18 years old, and my leaders, my managers, taught me that if I could not close the deal and the client, that if someone else pulled their credit, that my client might not be able to get that deal again. So I would go freaking out, sit down with my client, hey, that's okay, go shop, but don't let them pull your credit. Your score's gonna go down. It's a scare tactic. It's a scare tactic, not on purpose. It's a scare tactic because of propaganda that has been driven through sales to the point where no one educates themselves and no one has known that, no, that's not accurate. So it's misinformed. And they're not wrong by telling you they don't know any better, so they're not at fault. I did it for 5 years. I was just listening to my manager and I didn't do my own research. Just like you've heard it for however many years of your life and you didn't know any better. Because we never sometimes take the time to question things. I question everything now. It's great and bad. My regionals sometimes don't appreciate me, but that's a different story. But with that being said, that's good, because then I feel confident that when I'm saying something, yes. And when I stand up here and I tell you yes, or when we tell you yes, you're pre-approved, put that offer in, you can also feel confident that you have the right people on your side. So pulling your credit today, unless you have had it pulled 30 plus times in the last 24 months only, why? Because credit inquiries only see your credit for 24 months. Is it really going to affect your credit at that point? Sure, 5, 10 points. Lastly, in the last 10 years of me doing finance, I have never declined anyone because of too many credit inquiries. And I mean, I've had people that have had over 70 credit inquiries. I can simply justify it to the bank by saying they were shopping around for the very best deal. Simple enough. Yes, sir.
So let me ask you this, how inaccurate would a Credit Karma credit score be?
That's a great question. And the reason I say that is because I've had it be 100 points plus lower, and I've had it be 200 points higher.
And how do you find out your own self, your real credit score?
I don't like to advertise them because it doesn't do anything for me, but you can pay these guys, myfico.com, makes me no money, but you pay them $60, $70 and they'll give you all 28 credit scores. Third-party website, not sponsored by me at all. And I'm going to go create my own apparently. But these guys will do that for you. I think, yeah, when you pay under products here, something, but yeah, you can do it there. The one-time report, and that, yeah, it's $60. But again, you can literally, that's still not going to tell you the whole story of what it takes.
Right.
A credit score is literally a minimal ounce of what it takes to qualify. It's how many job changes have you had in the last 2 years? How stable have you been? Stability, believe it or not, sometimes goes a whole lot further than credit score, especially when it comes to buying a house. Okay? I've had people who have absolute phenomenal credit scores and their bank statements are absolute disasters because they have overdraft fees and their bank statements are negative every single month. They make bad financial decisions that are not on the credit report. I can't approve them. So, the best thing to do, if you have time today, would be to sit down with one of my team members, speak with them, even if you're not going to apply today. It would be to sit down with one of them, explain to them your scenario, talk to them. If you plan on buying any time in the next 12 months, my professional advice would be apply today. So we can tell you how to be in the absolute best financial situation before you put in that first offer.
And even if you're not ready, they tell you you're not ready to buy today, they will put you on a path to be ready. They have a tool that would allow them to move some things around in your credit to determine this is what you got to do to be ready in the next month, 2 months, 3 months,
Absolutely.
6 months.
And sometimes it's more than that, guys. Sometimes it's not credit. Sometimes it's other things.
Yeah.
Sometimes it's other things. Had a family that I spent 2.5 years with. They started out, scores under 500. I'll leave it at that. just started new jobs. I worked with them for 2.5 years. They got to purchase their home February of this year for over $200,000 with $15,000 in down payment assistance at that time. So they got into a home with $2,500. Their credit scores were in the 680s. They had been at their jobs for over 2 years at that point, had moved up to management, were making almost $5 more an hour each, had paid everything off slowly. And not only did they get a much better deal and get into a house with a lot less than we had talked about down, they were in a better financial situation that they were not going to struggle making that house payment at all. And we were able to do that. So, some of the stories. On that note, if I stay up here, I will talk the whole day. So I am done. Thank you again so much for your time.